So let's get started with the first section of the data entry sheet. In all of the videos that follow this one, I'm going to be using, for demonstration purposes, a sample project that I have created. This project theoretically involves the purchase of an existing house and land, the subdivision of the land into 4 titles, the renovation and sale of the existing house, the construction and sale of 2 new townhouses, and the sale of a vacant block of land. Although this project is theoretical, it does display and it does demonstrate the power and flexibility of the program in doing complex feasibility studies on a wide variety of real estate investment strategies. An important point here is that the data entry sheet is broken down into a number of different sections, and as I scroll down, you will notice that the property information, for example, is the first of these sections. These are the same sections that are referred to in the home menu. Down each side of each section is an indication of just when this section needs to be completed. It's important to remember that not all sections are needed for all investment strategies. Some sections of the data entry sheet are purely optional, and contain information that is not necessarily related to the financial aspects of the feasibility study. Let's look at the first section of the data entry sheet, and that is the property information section. The first items on the left-hand side are the street address and the suburb or town of the particular investment property that we are investigating. When these are entered, and the state is selected from the drop-down list, the postcode and the local government areas are computed by the program. The selection of the state is particularly important because it is used in the calculations of stamp duty and land tax. On the right-hand side we have a number of items which need to be entered that are particularly relevant to the property that we are investigating. The first of these is the value of the vacant land, and this is an estimate of just the land value, without any dwellings that are on it, and it is used in the calculation of the GST and the margin scheme. This would normally be shown as the unimproved capital value on the property rates notice. The second item is the market valuation. As we all know, when we borrow money from the bank, they are not generally inclined to estimate the value of the property at the purchase price, so the amount we enter here is what we consider that the bank will value the property at for the purposes of lending. The only effect this has on the feasibility is in the determination of how much funding the investor needs to supply to complete the project. The next item is the statutory valuation, and this is the item which is generally shown as the amount on which rates and land taxes are calculated on the relevant tax documents. The next item I have called confidence, and it is entered as a percentage. What this does is simply take into consideration your degree of confidence in the figures that you have entered in the feasibility study, and allows a dollar value for contingencies over and above what you have entered for your costs. So if you have entered a confidence of 95%, then 5% will be added to all of the costs, like renovation, construction, and development costs, as a contingency. If you enter a confidence of lower than 90%, then a warning will be issued indicating that the amount of contingencies allocated in the program will make the figures unreliable. The next item is the number of titles in the project, and this is purely and simply the number of saleable titles that you will have when the project is complete. This number is also used to make sure that data is entered correctly elsewhere on the data entry sheet, so it is extremely important. The next section we have is the GST section. Only 2 selections need to be made for GST. The first is your BAS reporting period, which can be either monthly or quarterly, and the second one is the GST scheme as it applies to this particular project, and there are 5 alternatives. In order to make the correct selection in this area, you will need to know whether you are buying from a registered seller or not, and whether you are going to apply the margin scheme on sale or not. The GST Assistant button on the right-hand side will help you make the correct selection. An inappropriate selection will make the financial results invalid, so make sure that you understand the ramifications of the selection. Further down in this section on the left-hand side we've got the pre-purchase costs. These are typically the costs that you would incur before you actually commit to a purchase, and this is just simply a checklist of items. The description that you see down here can be changed to whatever you want, and you can add to them if you need to. For example, if we wanted to do a market valuation, then we can simply type an additional item in here to add market valuation to our list of costs and a cost for the new item. Any modifications we make to any of the cost items on the data entry sheet will also be carried through to the detail reports. Any one of these titles can be changed and any one of these can be modified. All of the costs in this section must be entered as exclusive of GST. On the right-hand side we have the purchase costs, and all these should also be entered as exclusive to GST, and similar to the pre-purchase costs, these items can be added to, or changed if you need to, and when the purchase price is entered, the stamp duty will automatically be calculated for the state that you've selected above. This concludes all of the data entry that is required in this section. Please proceed to the next video.